Investors and traders, welcome to the channel. Market chart pattern. Today is 23rd of February 2025. I hope everyone had a fantastic weekend. We will be taking a look at the key US markets in this video segment. As always, the video is for educational purposes only. It is not a financial advice. We are taking a look at our Dow Jones Industrial Cash timing model. We have a key date or timing coming in towards the end of March 2025. Because the weekly chart we should give it 2 weeks on either side, so pretty much from the middle of the March the timing is like to actually begin. But even from the start of the month of March, which is not too far away from trading days perspective, I think we need to be a little bit cautious moving into the month of March from equity indices perspective. Now let's take a look at the key market. So we'll start by taking a look at the US dollar. This is the weekly chart of US dollar, and what we discussed last week in the video. Um, it went right into the point or the zone we were watching for, and now what it's doing is more of an ABCD um, pullback right here. It's possible it could go to 106.10 on the weekly chart. But last Friday, you can see we saw a candle which had a negative close for the day, right at the 20-week moving average. But it's not. It doesn't have this big body, so it doesn't have that wide range. So the selling pressure for the US dollar wasn't there in comparison to the previous couple of weeks. As we near the key level that we are watching. Now, if we just take a look at this on the daily chart, we have this really nice pattern completion, and this is where the deep seek scare came into the market. Dollar shot back up, and now it's just moving lower. But it's also getting into that support region. On the daily chart, there is a possibility maybe we could get down a little bit lower, right into this box, just because it's the ABCD. But the weekly chart, because the 20-week moving average support, the chances are we might just go sideways, and then there is a chance that the dollar could actually rally, because we are getting into a key region, and also the dollar has been selling off for quite some time. Now, if we take a look at this on the flip side with the Euro USD, here we go. So the euro, you can see that is also range bound on the daily chart. Our really key level is around 105.35 to around 105.75. This is the region where I think the euro could actually find some resistance. And getting above this, especially taking out these swing highs, I think we could say the euro might have seen some sort of a good bottom, perhaps a double bottom, because of this price action. The most interesting one this week is actually the British pound. So the British pound has actually completed its ABCD right into the 78.6% retracement. And this is where we could see a good resistance come into play, because of the 1-to-1 price projection, and also this being the 78.6% retracement of these highs to these lows, and also a 38.2% retracement nearby from this high of 26th of September. Maybe it goes sideways for a few days, just the kind of action we saw right here, and then we could see the resistance could play out. On the flip side, if it is strong, and especially if it gets above the swing point, take out the highs to the upside, and then British pound is likely to get much stronger. Okay, so the other currency pair that we are watching is the Japanese yen versus the US dollar, and this one, oh wow, I thought this 78.6% retracement will hold, which it did for a few trading days, but the selling pressure has been just relentless. And we are now really, really tagging these lows right here. Getting below this, of course, changes a lot of things. It's like a rounded top. Below these highs, we could see the Japanese yen strengthen. However, what we're looking at on the dollar index chart is that the dollar could actually strengthen as well. But dollar index is a index which is about 51, 52% euro. So and the Japanese yen is a smaller percentage, so you have to take that into consideration. Now let's take a look at what happened in the interest rate markets. So we start by taking a look at the shorter end of the curve. The yields actually pulled back, especially last Friday. Perhaps it was in reaction to some economic data that came out. Here we go, and what we are now looking at is basically this kind of a triangle pattern, and we could see if it breaks to the downside, yields could actually move further lower on the 2-year note, perhaps to around 4.07%. That is also possible, and you can see there's a fair amount of resistance around the 4.385% percent level, just below the 61.8% retracement, and the market has been range bound for quite some time, since November of 2024. Now the most interesting one is actually the 10-year treasury note yields. So the yields keep on falling. We had a really good resistance level right here. The market actually moved in a one-to-one price projection fashion right into the 61.8% retracement. This is where I thought that we could see a good rally, which we saw, and I really thought that yields were perhaps going to move higher, but that did not pan out that way, and the yields actually moved lower, and they are now testing back towards the support, or towards this low of 7th of February on the 10-year note. Now there's a possibility that we are actually in a bigger ABCD to the downside, so let me actually draw it like this. And this is actually what we have already drawn on our 10-year treasury note chart on the futures. So we could see the yields actually move lower if this 61.8% retracement is broken to the downside. But you can see this trend line was broken right here, but we can still see that the yields actually put in this higher highs actually, and higher lows with respect to this low, with respect to this low, this one to this low. But once it breaks this pattern, then things are changing. So let's take a look at this on the futures chart. This is the 10-year treasury note futures. This is the daily chart, and this is what we were discussing last week. The market went right into the 61.8% retracement, pulled back to the 61.8% retracement from this low to this high, so range bound formation. Then it has had 3 consecutive positive closes. Chances are we are in this one-to-one price projection to the upside, so 110.15 might be in play. We had a really nice pattern both in time and price. If you look at here, this was the timing we discussed. We had the nice symmetric move right in the 38.2% retracement. Market did go down quite a bit, however found support from the 61.8% retracement of these lows to these highs, and now essentially it's range bound, but it does because the 61.8% retracement has been held, the chances are we are in this CD leg higher, so we could see actually yields move further lower on the 10-year treasury note. And on the longer term long bond futures, here we go, we have a similar situation. It does look like maybe wants to go and challenge these highs. It's finding some resistance from the 89 period moving average, but quite stable price here back into this region. Gold. So let's take a look at the gold futures. Gold, really interesting price action. Gold actually went and made a new all-time highs last week, but you can see it's still trading around these levels. For it to really move much higher, I think we should begin to see daily closes above this level, and we are looking at about 3,000, more than it's very close to 3,000, 3,150 perhaps. I can just draw further extensions. This is what we are looking at in terms of the gold. On the weekly chart, you can see a fantastic candle, took the highs out of the previous week. Really strong price action in gold. And if we were to take a look at this on the spot gold chart, let me go back to the daily chart on the spot gold. Here we go. We have a similar price action in terms of the price levels that we were watching, with the 1.618 expansion around the 29,400 and 400 and 29,000, excuse me, 2,944. So the high has been 2,955 on the spot chart. It hasn't really hit the psychological level of 3,000 yet, but we are not too far away either. Now, if we just take a look at the silver futures are just not performing just the way the gold futures are. The 78.6% retracement is just kind of stuck in this trading range. Now it's really we have another triangle formation right here, in my opinion, and it's kind of moved like this now. So whether it is in this ABCD move higher, so we could see 36.68, or whether it's finding a lot of resistance right here and it could move back into the range. I think the breakout of this triangular pattern, these dynamite triangles, as they like to call them, we'll have to wait and see. So we have to be a little bit patient, but it looks more bearish because of this candle price action and these candles being essentially inside this range. Now let's move to the equity. So let's take a look at the S&P 500 cash. So we had a move last Friday in the S&P 500 and the equity indices in the US market. This move was about 1.71% to the downside. So the S&P 500 lost about 104 points. It's in terms of the points, it's one of the bigger moves that we have seen, especially in particular this year. So that was minus 40. This one was minus 30. And quite a big percentage move as well. So the biggest one this year, certainly. But what is also really interesting is that it actually stopped right at these 61.8% retracement of this low and 38.2% retracement of this low. So we have some support right where the market closed. One of the things to note is that it happened on a Friday. What we are looking at is this move also happened on a Friday, and this was also a Friday. It looks like moving into the weekend, the market doesn't want to take too much risk going into the weekend, because on the weekends we have had news come out. Let's say, for example, the DeepSeek scare. I think it was somewhere around here. And then I think the tariffs news came out around the 7th of February, which is around here. So some of these did produce a knee-jerk reaction to the downside, and then the market bounced back up. Could this be a similar situation? So the important thing is to see on a closing basis whether we have a follow-through or not. That's going to be the most important thing from a structural perspective. What we have seen is a low, then a higher low, and then we have also seen a higher high. As long as this point of 3rd of February is intact, I think we are in this ABCD structure, so we could see even 6,300 possible on the cash chart. Now let's take a look at this on the weekly chart. One of the reasons that we are actually stuck where we are in a trading range over a few months now is because of this completion of these big ABCDs right here. So not a surprise, such big ABCDs being completed right here. So we are seeing the market being stuck in a trading range. Now if we just flip to the futures and take a look at the price action on the futures chart, is similar kind of price action, ABCD right there, the smaller one in red. And then if we just move back to the daily chart, here we go. On the daily chart, what we see is basically similar to what we saw on the cash. We have the 61.8% retracement, and then we also have the 38.2%, which I've not drawn from here. Let me actually try to draw this right here. And there we go. So we have a confluence of two ratios coming together. So that is always a region we pay really close attention to. So this region could be pretty good support, and let's see if we get a follow through or not. And we should watch it on closing basis. Now let's take a look at the NASDAQ 100 cash. So this is the NDX, NASDAQ 100 cash index. It also had a pretty big move to the downside, was down about 2%, lost about 454 points. It's one of the bigger declines that we have seen. I think last time something comparable might have been 386, and this one was a really big 791 on the 18th of December. So the important thing is again to wait and watch for a follow through. Because such a big move, there is a chance, intraday we could see some follow through to the downside, close right, pretty much to the very close to the 78.6% retracement. Now, let's wait for a follow through. Whether we get one or not, we'll have to wait and see. And if we do not see a follow through, I think this market is actually stronger than the S&P 500. We could basically see higher prices could reach than 22,560, maybe even 23,000. All depends upon really key levels, especially this low of 13th of January not being broken to the downside. Now, if we were to take a look on the longer term weekly, what we can see is basically we are most likely in this ABCD higher. We reached our first target of 21,580. We could make a dash for the upper boundary of this channel again, around 22,700, all depending upon those key levels that we took a look at on the daily chart. So really interesting formation taking place in these indices. And now let's flip over to the futures chart. So here is NASDAQ 100 futures. And what we are looking at is basically you can see it is again in a range bound formation right here, pretty range bound. First target of 22,000 roughly was met. Maybe it wants to go and complete this extended ABCD to 23,250. We're not just too far off in futures. And then let's take a look at this on the daily chart. Here we go on the futures as well. We can see we closed right at the 38.2% retracement. This is a move that we saw, which was about a minus 2.75%. It lost 603 points, but there was just no follow through. The follow through, the lows were never taken out to the downside. This move has been minus 475 points. And let's see if we get a follow through. So similar to what we saw in the cash charts. Now the real interesting one is actually this one, which is the Dow Jones, because it's behaving in a different way, and I think it's because of the participation of its constituent stocks. Dow Jones is a price-based index, is not based on market cap. So stocks which are really highly priced in the index, they influence quite a lot the index itself. So here on the 31st of January 2025, the market actually made a new all-time highs in the future, and also did that per my memory. Please do correct me if I'm wrong on the cash chart as well. And then since then it's just kind of rolling over. You could look at this. There's a lot of resistance right here. It broke below the 38.2% retracement, below this swing point, and it seems to be moving towards the 61.8% retracement around the 43,000 level. So this chart is index is showing something a little bit different. So we need to be paying really close attention to, because this markets rotate, and it does look like we are seeing a rotation underneath the these indices. I actually did a video yesterday in that we took a look at 5 stocks which actually on the weekly basis outperformed the broader index S&P 500. So where S&P 500 actually closed negative on the weekly basis, for example, those return positive returns to the investors. So that's a really interesting aspect, because if you look in terms of relative strength, then those stocks are actually stronger compared to the broader index. So this is why if we just take a look at some of the Dow stocks, such as Goldman Sachs, you can see pretty big move to the downside, lost nearly minus 2.6%, and the day before minus 3.87%. So 2 consecutive days lost quite a lot of points in percentage. And then if we take a look at even the JP Morgan, you can see lost minus 4.46%, and then nearly a percentage point last Friday. And if we take a look at Caterpillar, here you can see it's just been going down for quite some time. Last Friday it lost minus 2.61%, and the day before about minus 1.1%. So really interesting what is going on with the stocks beneath different indices, and I believe there is a rotational aspect taking place in the market itself. And let's take a look at the Russell 2000. It was hit pretty hard. Lost nearly 64 points, or minus 2.82%, and it's come back right towards the bottom of this trading range. And if we were to take a look at the IWM, which is the ETF, lost minus 2.88%, and right at the bottom of this trading range. So if it begins to take out these lows of 13th of January, that's not going to be a good sign. Then we are looking at, if we just draw a trend line like this with some overshoots, we could be looking at A, B, C, D to the downside. But right here, it's just coming back towards the bottom of this trading range, right at the 78.6% retracement. And I can also see an ABCD, like an extended one right here. I'm not going to draw all the ratios here, but just something something like this actually. Here we go. And then we have an extended one right here. Not really too extended, but there we go. And we could have a pattern like this. There we go. So we could be looking at something like so. Let's see if we get a follow through to the downside here. New York Stock Exchange Index, NYA. It also had a day where it lost minus 1.33%. Now it also has ADRs, but look, one thing is not being able to take out the highs of the previous, when it set it up in November of last year. So that is something important to note. Dow Jones was able to do that in futures and cash. NYA is not able to. So this is where I think we are entering a time period where we need to begin to be careful in the equity indices, tighten up our stop loss, and also just keep on watching the rotational aspects. This is where I'm also making new video series where we uncover stocks which are actually making new all-time highs. Actually, for example, Starbucks, it made a new all-time high. And then we also have a stock which is Abbott Laboratories. It made a new all-time high. I believe it's a new all-time high. Oh, excuse me, it's a 52-week high. Starbucks also made a 52-week highs. But then you also have a stock like Philip Morris. Here we go. It is actually in the tobacco industry. Not only did it make a 52-week high, but I think it also made a new all-time high. So this is really, really interesting that how the market is actually rotating through. So really interesting. Let's have a quick look at some of the European markets. So this is the German DAX. The German DAX has been actually moving lower. It's filled this gap. But it's came very close to our target of 23,100. Maybe it goes range bound a little bit. Maybe it goes and hit this level. But our extended ABCD, I think it's pretty much reached that target. Now, if we take a look at the UK's FTSE 100. This one also, it's actually exceeded this target, and it came well. It's also met the 1.618 expansion. So FTSE and DAX both have actually met our targets, and I'm not surprised it pulled back, and I will be not surprised if German DAX actually pull back further, but it might actually do it in a different way. We might begin to see an ABCD kind of corrective form take place both in the FTSE 100 and the German DAX. So I think we are likely to begin to see now some sort of a pullback or some selling pressures actually begin to come into the equity markets, both in Europe and then also, of course, in the United States. Just because in Europe we are completing our targets, so no further targets. Just watching the price action and not surprised that we have already seen some sort of a pullback. Now, whether the market is just a pullback and begins to move higher, or it goes range bound, and from range bound to perhaps move further lower. If the correction is to continue, we'll have to wait and see. But our targets on the DAX and FTSE 100 met. And this is what we like to see. So thank you very much for watching the video. Good luck, good trading. If you happen to like our video, then give it a thumbs up, and if you learned something, you found it of educational value, then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. No videos, nothing at all. You will not miss it. So thank you very much once again, and speak to you guys soon.